Good evening, everybody, and welcome to another edition of Live Market Analysis. It is such a pleasure to be coming to you from Perth, which is freezing cold right now. If it looks cold, because I've got all the winter gear on, it is absolutely freezing and raining outside. Hopefully, it's a little bit warmer and nicer where you are. But enough about the weather. We're going to talk about stocks, commodities, bonds, indices, crypto, and hopefully you're going to learn a whole lot about all of those things and how to trade them after we discuss the disclaimer, which says that the content we're going to discuss is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs. Before acting upon this information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. As always, remember that trading is risky anyway. Regardless of where you're getting advice, you're probably going to lose money at some stage. It's important to know how to deal with that and how to minimise the risks to you. Ultimately, it's you, however, who's responsible for the stuff you do and not me. Let's get into it tonight. Get those questions rolling. It could be anything to do, as I said, with stocks, indices, bonds, crypto, commodities. It could be anything to do with the 3 M's of trading: methodology, money management, mindset. I'll do my best to answer your questions. Let us, whilst those questions are coming in, as we like to do, head over to the Amy Broker screen where we have our portfolio management model up for US stocks, and plenty of people who listen to these sessions invest both locally here in Australia on the ASX and in the US, and probably other areas, but they tend to be the 2 main ones. So for that reason, I do run 2 portfolio management models, one based upon the Nasdaq for US stock holdings and one based upon the ASX 200 for local holdings. And if you're listening from somewhere else in the world, we do have international listeners, use the same methodology I'm using here on your preferred market index, the one where you have most of your exposure. For the US, on the Nasdaq, we are double green. Double green means short-term uptrend. That's the short-term uptrend ribbon over here. Long-term uptrend, that's the one there. And the idea is that because they're colourful, and because they're simple and they're a bit slow and they don't respond too quickly to what's going on in the market, they're a really great tool to just tell us very quickly what's going on. We're talking about the underlying trends here. The light green zone tells us what the traders are thinking. The dark green zone tells us what the big positional longer term investors are thinking. And when they're in agreement, that is, traders are buying en masse predominantly and investors are buying en masse predominantly, then that's when we tend to get the best or the highest probabilities that the trend will continue. If they start to disagree with each other, well, that's never good for prices going up or down, is it? Disagreement. We're probably going to get equilibrium, and then they could be agreeing the other way, so we could get double down trends. For now, we're double green up, and that's a good start. Next place I go is the price action. So we're looking inside the trends now. Yes, the trend ribbons are great, big, broad brush themes, but as I've often said, if the trend ribbons are the chapters, then the price section, which is the relative location of peaks and troughs, as I guess created by these candles, they're the chapters. No, wait a second. Did I say they're the trend ribbons are the chapters and the price sections the paragraphs? And really here we're looking for rising peaks and rising troughs in an uptrend to signify demand side control. So rising peaks, you can only get that when you've got supply removal. Rising troughs if you've got demand reinforcement. And then I guess the sentences, or maybe even words sometimes within those paragraphs, are the candlesticks. We're getting finer and finer detail here. And the candles really tell us what's going on during a session. And a few candles might give us an idea of what's going on over a few sessions. But this candle here is almost completely irrelevant compared to the broad long-term trend, isn't it? The trend ribbons are far more descriptive there. So, but we're putting all of these things together to get an idea, as I said, of who's in control of the market. The demand side prices more than likely to go up, but not guaranteed. Supply side prices more than likely to go down, but not guaranteed. And when they don't agree, we'll have ambers all over the place and alternating black and white candles and falling peaks and rising troughs. Nothing will match up. And prices more likely to go sideways, and that's all we're trying to do is get that more likely, that more often than not. And I would say here that more often than not, price is going to go up, and therefore, and it's not just that, it's obviously the degree of positivity we're seeing here and how almost complete the demand side control is. It's helping us go to a full risk position. That's kind of the point here. We have 3 grades of risk setting. Sometimes I might break it up into a little bit more, but typically, 2/3, fully invested, 2/3 invested, 1/3 invested, or we actually don't go below 1/3. Sometimes I'll put the half in. That's what I was going to say. So full risk position there, I can't see any reason not to. Friday's candle certainly was an emphatic reinforcement of the trend, and thankfully did it on some decent volume. As you can see down here, we finally got back to average volume after what was a very, very quiet week and a bit before that, because markets were just investors were doing nothing, markets were doing nothing, but really came down to investors. The demand side and the supply side didn't want to participate ahead of Jackson Hole. Once we got some certainty with what was going to happen, what is potentially going to happen with interest rates later on in the year from Federal Reserve Chairman Jerome Powell, the money came back in. As you can see that, it's pretty obvious. Let us head over to the Aussie market now. And I think a cleaner, crisper trend here in terms of trend ribbons, both very good, of course, with short-term uptrends and downtrends here, but also compared to the Nasdaq. But I think the price action is cleaner. There's a few wild gyrations. It's just a very steady sawtooth pattern higher. And I think the candles are cleaner as well. We have a greater predominance of white candles and downward pointing shadows. Downward pointing shadows is very important because that's buy the dip, and white candles is just buy the buy anything. And both of those are good signs. Today's candle's not ideal, but if you read my evening wrap tonight on Market Index, which is the where I contribute a lot of content to on a daily basis, you would have read that there are some disturbing elements of today's trade. So obviously banking sector, which has a huge weighting in the Australian market, coming off and really responsible for most of that upward pointing shadow we can see on screen. But on the other, there's always a silver lining with the Aussie market. If banks are going down, then resources and energy are probably going to go up, and we're going to see that when we get to the indices. Net, we saw more advances than decliners. So I think we're okay as the message, but we just want to keep an eye on the next couple of candles and make sure that upward shadow isn't reinforced in a really sort of sinister supply side way. In the meantime, stay the course FRP there. Full risk position on both. And you know what you need to see if you've been listening to me long enough for that to change. If between now and I see you next, I only see you once a week, so you need to be able to make these decisions in the meantime. And of course, an abundance of black candles that start to appear lower peaks, they're all disturbing. Closing beneath the short-term uptrend ribbons are all signs that you may need to manage your risk before I see you next. And now what I like to do is do the whip around the grounds and see if there's anything out there in the world of risk on or risk off, basically the spectrum of applying capital or taking out of the market to push me off the settings I've just determined. And there's nothing here. As I've told you before, I tend to look at this chart once a week, and I wonder if you're the same. I wonder if you're the same looking at this chart once a week and are just tuning in and seeing that candle for the first time. And what do you think of that? What does this mean to you? You can either give me a thumbs up or a thumbs down, or I think you can do celebration tools, or find the emoji that I think best suits this picture here that we're seeing on screen, because you're all kind of on the same page, I think, because Russell 2000, one of those really risk-on markets like the Nasdaq, and that is a monster candle. And you heard me, if you do read my my ramblings and my scratchings each evening on Market Index, I was really trying to point out last week just how subdued the market was in anticipation of that risk event. And I think I've been vindicated by that candle, because some money's flowed back in. But at the end, look at the volume down there. Certainly we've got a big volatility pulse. You can see this is the volatility here. But hardly an emphatic push in volume. So look, a bit of demand came in and it found a bit of supply, and removed some supply, which is good. Supply ran away. There was some supply in the market, but it ran away because demand was very motivated. But we would have wanted to see maybe a stronger signal on the demand side. Otherwise, I'm with you guys, celebration emojis and all that sort of stuff. That's really encouraging, I think. Hey, I can't tell the future. I know we've got 3 from 3 encouraging signs, and it could be the top of the market on Friday and down forevermore from there. We don't know the future, but we don't stress about the future, because if it is going to turn into something really bad, don't worry. We're going to see it here, ladies and gentlemen. 100%. Nothing can happen here without us seeing it first. That's good news. Let us go to Europe then. And there's nothing really there, is there, to worry about on the CAC, which is great. Nothing to worry about in the DAX. And you might say, Carl, what you're doing really, really granular analysis on these charts. I don't need to. I'm just looking for red flags, and there's nothing here to push me off my idea to be full risk position. In fact, we are seeing some strong signs here of coordinated, synchronized risk-taking ability. I keep using that word, don't I? I keep using that word, risk. Because, ladies and gentlemen, I don't know if you've realised, and maybe the longer you hang out with me, you're realising this more, you're risk managers, okay? You're not investors or traders. You're not punters anymore, certainly not. You're not mum and dad investors, that's for sure. You're now risk managers. And really, we were just on any day of the week trying to determine, do I want to be invested, do I want to have risk on, or do I want to be risk off? And those terms I keep using, you keep using in all my analysis, don't I? Risk on and risk off. That's us now as well. These all look pretty risk on to me. Nothing doing there in India. Certainly not going to push off my thesis. And I've talked about lots recently of this building momentum in the Chinese markets. Why is it happening? Because their economy is going gangbusters? No, it's not. It's not going gangbusters at all. But that maybe there's some stimulus coming that we don't know about, hasn't been announced yet, or it's just a good old-fashioned Chinese stock market bubble. And ladies and gentlemen, if you've seen these before, there's nothing quite like them. They are something to behold. And when they really get going, the Aussie market is just dragged along in the wake of this speculative fervour. So that's pretty encouraging, I think, as well. And I know some of you are starting to investigate some of the ETFs we have listed here in Australia. If you're internationally, I'm sure you have ETFs on your market too. Bringing it back home over here in Oz, of course, we'll have a look at some of the individual indices, and we've talked about sector rotations. There's sector relationships and sector rotations as well in tonight's wrap. And we are seeing some weakness in banks today, but maybe it's the start of something I said. But improving strength, I think, in energy, resources. There's the bank candle, actually. And that one's a real one. We said the one on the XJO today was a bit make-believe because there was some mitigating circumstances, one being the banks and the other being the good market breadth and the strength in some of the other sectors. But that's a little bit disturbing. They have had a great run. Gold actually picked up really well today, and some of the international gold stock ETFs are looking very strong. Healthcare is persona non grata now, of course, with what's going on with CSL. I think I might have hit a few nerves tweeting about CSL during over the weekend there. As a few people got a little bit upset about me doing some technical analysis on CSL. I thought that was quite comical, actually, given it was coming from a particular person, I think, whose entire business model is being undermined by the fact that you can just look at a chart and do it yourself. And when you think about how you try and convince just average people that the more financial mumbo jumbo in terms that you can throw at them, the more sophisticated you are and the more they need your help, when in fact all you need to do is look at black and white and green and red and pink and you'll be fine. It is a little bit threatening for some people, but I digress. Let me get back on track. We're saying that the information technology sector there is okay, a little bit flat, but still okay. Materials, this is the one to watch. It's surprised me, certainly since I've been back from holiday. Resources, obviously the same thing. Energy, I still think real estate looks very, very, very strong. Three varies. Staples, don't know what's going on there. They were looking good until the last couple of days. What have we got here? Telecommunications, Telstra index is still very strong, and utilities very strong. So mostly we're seeing a coincidence of or synchronisation in those moves, with the exception of healthcare. Let us go to the base metals, and I'll pick up the pace. Don't worry. Where am I going? Line charts here. We often say at this juncture, don't we? Well, if the world is going, equities are going to be strong, then the global economy is strong, and therefore base metals should be strong. And we know that's not going to be the case. We know we're going to see pretty mediocre charts here on aluminium, copper. We'll look at iron ore, look at nickel, look at lead, tin. Anyway, it doesn't need to make sense, is the point. You just need to, again, black, white, pink, red is all that matters. Let's go back to here. I think some people prefer it to make sense. I don't care. I just want to see the charts heading in the right direction. On lithium carbonate, I did a big write-up today because I felt it deserved it. I do often, I cop a bit of flack actually for my views on lithium. But it has been a confusing run, really, to be fair. It has not, as I've said last week, it hasn't exactly done what my model would have liked it to do for me to make clear and confident calls And such is the nature of turnarounds after what has been such a protracted bear market. And we're only seeing part of it here, because this only goes back to July 2023 when the GFEX lithium carbonate futures started. It was a lot worse before that. We are at a critical juncture, which is another reason why I felt it was necessary to do that right up today. We need to see some demand come in around here, like really, really soon, or we risk fading back beneath that long-term uptrend ribbon and doing a bit of a uranium, which looked promising and then just completely, just faded out. It's not all lost. You've got two little tweezer bottoms, if you like. That's really sort of pushing it, but at the confluence there of the short and long-term trend ribbons, hey, we haven't broken into them. I think that's encouraging. Volumes dying off, suggesting maybe that wall of supply is, and even today's candles inside the last candle, that wall of supply is potentially diminishing a little bit. Demand is there, it's lurking, there's some decent volume, but it's unable really to impact price just yet. So if anything, we're seeing, I was going to say a touch of equilibrium here, but even that's a tenuous call, given that there are some pretty solid supply-side candles. I reiterate, next few candles are going to be the key, and I don't know how it's going to play out, but I can say if we do see that strong rally from here, then yes, everything is in place for a new lithium bull market. And if I see it, I have to call it as little as I believe it, if you get my drift. Let us head over to, watch this, we're going to try to go here. No, it's blank. But it will not be blank for long, because I'm going to click on this Firefox button. And the Firefox, because I could not get, remember we had technical difficulties last week, I could not get Chrome to work no matter what I did. I spent well over an hour Googling the hell out of this thing and tried all sorts of things, and I couldn't get to work. I switched to Firefox and it works intermittently. So something's going on with OBS. And if I can't get it to work by next week, we'll use a different system, not that it impacts you. But the good news is we're going to have some charts here in Chrome. We might as well start with Bitcoin. That is a super interesting chart, because it looks like it's breaking down. It's doing its best dying swan impression there. But even if it does break down from here, that long-term uptrend ribbon is not far away. And I'd be looking for some price action there to suggest that maybe demand's coming back in and fading this little short-term downturn that no doubt they've manufactured, because as Bitcoin loves to do, a little false breakout there. What a signal here. Just tipping that peak there, and then the big black wipeout candle, and just caught everybody on the wrong side of the market. But I do note that Ethereum looks substantially better. Today's candle is still live, so I would discount that. Otherwise, I still think we're okay there. When these start to overlap a little bit, like that up the top, maybe that's not as strong a sign, but still very much intact. I didn't mean to start there. That's just where the thing had its memory. So we will continue our whip around the grounds and our metals, and going to precious metals now. Silver, I think looks very constructive. We talked about how some of those gold sector indices, gold stock sector indices are looking quite good. Not that gold's looking that great. It's still very, very much sideways, but hey, it definitely could pick up. I wouldn't discount it. Copper is stuck. It's going nowhere. I think iron ore is a little bit like that, but given what's happening in the Chinese market, I wouldn't rule this one out. I could see this doing like a 110 in the near term. I wonder where it could go a little bit further out than that. So that's sort of 110-ish through there, 115, 120. If those Chinese equities keep going, it's not inconceivable to see this at 120, is it? Or maybe even 130. And that would blow the brains, people's brains, isn't it? Some of these Australian analysts, they would not be able to comprehend that. Heading to uranium, we'll stay on the weekly chart for a second. That's a very constructive, I know there's some labelling there, but that's a very constructive little bounce. Second bounce, high or low, off that long-term uptrend ribbon. I know it's going to change when we get to here, but look, I said in tonight's evening wrap, that's constructive. That's the way I'd label it. We've got a modest uptrend developing. That's all it is at the moment. But certainly an improvement on what I would say was approaching a dire situation not that long ago. So that is a significant improvement there. Let's head to some of the energy Commodities here, stuck in the middle. I don't think anything major is happening on the crude contracts. And then we've seen a re-breaking down, if you like, of the coal contracts. But given what's happening in iron ore, you wouldn't maybe rule out coking coal there, but thermal is definitely stuck in a downtrend. I think that's it. I think that's all I need to do here. I'm going to head back to the AB Broker screen now and do some offline requests that have come in first, just so I can knock them on the head, and then we'll get to all of your online requests. I'll just make sure there are no technical difficulties here. I'm getting all sorts of comments from AI note takers. I noticed 3 or 4 of them that have appeared, and that's fine. You can use them. If you can maybe get them to not put their messages in the chat window, that would be even better, because they just clutter them up. If there's a setting, please investigate. I think we're okay in terms of technical issues. So I'm going to head over to mix 3 requests tonight, and the first one is going to be a stock which appeared on tonight's feature uptrend list, and it's called DUG, and which is Dark Technology. And you might say straight off the bat, hey Carl, that is a bit early, isn't it? Isn't that a bit early to go on the feature? You know, uptrend scan list maybe, but a feature. And I do like to mix up those features. I do want a good variety of continuation setup. So what does continuation setup look like? I know Hub comes to mind, Codan comes to mind. Can I get a thumbs up of people who are on Codan, still on Codan? And I better see some thumbs, I tell you what, because if you've gotten out, can I get some thumbs downs for people who were on Codan but have sold out of everything? And I'm only going to give you 1 free pass. There's one from John, because of the $30 a day. So if you said, oh, look, that's my last, but even it shouldn't be your last lot. Why would that be your last lot? You should still have 2/3 left, shouldn't you, John? And John is feeling little bit sheepish, so is Brett, because they're both thinking, yeah, you're right, Carl, but geez, it was looking so good. I was making so much money and I couldn't help it, mate. I knocked it out. And I gave myself a little pat on the back for about 5 minutes. And then for the last 5 weeks, I've been kicking myself in the ass because it just keeps going up. And there really isn't very much reason in here to be zero risk positioning. Through there, you probably still held a third, but it's been a very good one. My point is, and just using Codan as a case study, you know, hanging on to at least some of that winner. That's why we've got this system, guys, of selling down in fractions and not being all out. Is our goal is to have something on a chart that looks like that. So we talked about continuation setups, and we talked about turnaround setups, and I think this is one of them. I'm trying to think of maybe one in the list that is that sort of classic turnaround setup. Maybe even ACDC kind of starts to meet that criteria. And I would love to see markets through your eyes. I honestly would, because I wonder if you spotted that. Did you spot that? Can I get a thumbs up or a thumbs down if that's the candle that your eye is actually first drawn to? Just one, just Nigel. Nigel twice. Anybody else? Because ultimately my goal is to get you, and this might sound like I'm a bit full of myself, right? And I'm happy to risk that. But my goal for anybody that wants to listen, and you don't have to listen, right? You can be here on a Monday night, or you can be somewhere else. That's up to you. I don't force you to be here. And I don't know how many people, about 36 people here tonight. If there were 360, I wouldn't care. If there were 3, I wouldn't care. But my goal is to get you to see the market through my eyes. Why do I do it? I don't know, because I did have this notion of mortality at one stage in the not too distant future. I figured, look, if my lights were to go out, I'd take a lot of knowledge with me. And I kind of felt really bad about that, because I felt I've got something to get out there that other people might be able to use or not use. It's up to you. But I want you to look at that chart, and that's the candle that needs to jump out at you. And if it didn't, can we all at least agree that it probably should have? Can we agree that I've taught you that that's the candle that you need to know? Is that fair to say? That's the one. Like, of all the candles on that screen, and there's some really interesting ones, that is the candle. And if we can see that candle time and time again in charts, we should buy that stock and not ask too many questions. So that's good news. A few people seeing that. There's going to be a couple of other candles, and I know I'm all over the place tonight, but that's an interesting one, isn't it? That's also coming off that. And I feel that actually that arrow there is where I ran it as a feature chart last, because I was away for most of this run. So that was my first opportunity, that pullback and that bounce off that long-term trend ribbon confirmation. There I ran as a feature chart, 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 there I ran it again tonight. I don't know where it's going, by the way. It could go down. I was covering myself while I say that. But just in terms of setup, so that's, I guess, a turnaround setup that's turned out well, and I'm fortunate I picked it because it is the perfect, this arrow here at point X is the perfect turnaround setup. And then I'm getting back to Mick's question now, and Doug. This doesn't look like the perfect turnaround setup, does it? It looks a bit different. And I do think this is a bit more of an aggressive entry. So certainly we have a short-term uptrend. That's in place. Let's do the stuff we do have. We've got some really good candles. I think we can comfortably say we've moved back to a predominance of demand-side candles through here. Do we have higher peaks and higher troughs? So I think you'll find there's a little dink in there. So we have actually met that criteria. But there is one criteria that is clearly not being met right now, and then we don't have a long-term uptrend. At best, we've got a neutral trend. I think we've also met this criteria here in terms of seeing some really great volatility. It's not letting me draw it. Maybe that won't. No, it's not letting me draw it. But anyway, some great volatility coming in there, and a significant influx in volume, which tells us we've got some interest coming back to the market, and also some supply removal. And the reason why supply removal is important is because we've got potentially a great deal of latent supply in the market. So if something needs to go up, we need to deal with that supply. So lots of good stuff going for it. But once again, we don't have that long-term trend ribbon. So automatically it brings it down. It can't be continuation setup. We have to rule that out. Maybe it's a turnaround setup, or maybe it's the third type of setup, which is the aggressive setup. And I think that's the category this one fits more into, because we know that the turnaround setup has the dink that does that. And the turnaround setup is probably more likely the one that we're seeing, a bit like that ACDC, where it's dinked. We'll go back to ACDC, where it dinked. It's actually dinked. Well, actually dinked a few times, didn't it? So dinked here, and it hit that, and then what a great little touch that was. And then we got that candle there. So this really is the textbook one. And Doug doesn't have those attributes yet. And so there, I think we're now narrowing this down. Well, it's an aggressive setup, and the aggressive setup is where we might not have those characteristics, but we are trading with everything we need above the long-term trend ribbon, and ideally we're not seeing any major points of supply. And maybe there's a little one there, so we'll just draw that across. There's probably one there. Are these going to be influential? I think that'll be slightly more influential, and we obviously know this is going to be substantially influential. But I think we can, into all of those, make one-to-one quite comfortably, even if you were to go there, there, and there, that's one-to-one. Or if you to do something a little bit tighter and say, well, if we close beneath that big dominant demand side candle today, we probably would want to be in it. So, and again, this is not the black and white system. I don't teach you that. Ironically, people think, oh, we're going to get this hard and fast set of rules. No, you're going to get a common sense approach, and I think that flexibility is actually the best bit of this system, but always in keeping with this idea of trying to determine when the demand side is taking control. And I think it has. So let me get rid of all this stuff here and simply write on the screen for you, Mick. I agree with you on this one. I think this is an aggressive setup. I'm happy to go plus 1/3. If you prefer 1/6 because it's aggressive, go for it. But again, a little bit of a judgment call here. I think it's pretty strong in terms of it being an aggressive setup. If you have it for some reason, then FRP. And that's all we're trying to get to. We're trying to get to that determination at the end of the day. Let me change the colour on that. Going to Mick's second one, which is a stock which I've seen for the first time today. I did not know this existed until today. Maybe it was called something else. Decidr Ai Industries. Certainly an interesting and exciting name. Another aggressive setup. And I have put these in tonight's or in tomorrow's edition, so they might confound a few people. And I've done it on purpose. I want to see if I get any emails back because I haven't taught them the aggressive setup. I've only taught you lot. And it'll be interesting to see if they come back tomorrow with, hey, Carl, what the frick is going on? Because that's still a long-term downtrend. And you told me I need to at least see an amber. And look, yes, I just haven't taught you the aggressive setup. But once again, we've breached this long-term trend ribbon. The reason why we need to be more careful about aggressive setups beneath the trend ribbon, is because the trend ribbon is that dynamic supply side. Once we get above it, well, then we start to look for other zones. So up to here, and I don't think we've got any issues up to there, and then more likely up to there. So I think this is fine as well. Not more than fine. That's under, I guess, stating it. Everything else is there. I won't go over it because just ditto from the last one: candles and volume and volatility. Our performance against the ASX. We don't often talk about the RSC down here, but I'm sure you've also seen that that's quite useful in your own time. So we're going to go FRP, a ditto again. It is an aggressive setup, plus 1/3. I think it deserves it, and otherwise I wouldn't have made it a feature. And FRP, if you've got it, what do they do? I wouldn't have a bloody clue. And don't tell me either, please. Don't come into the session. You will be banned if you come in and start typing out, Carl, these guys, blah, 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 and they do blah, 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 because I don't care. Let's go to, it says blasphemy, isn't it? It's blasphemy. Surely you need to know what these guys are doing. You're putting your hard-earned money at risk, Carl. Codan. Let's go to Codan. I don't know if you've noticed, and I guess you have, because I'm preaching to the converted here, right? Obviously, but the more you know about the stock that you're trading, is it fair to say the worse you tend to trade it? I mean, what do you reckon in your experience? The more you know, the more research you've done, the more screwed you are. There you go. Codan and Mick has said an aggressive setup here on this one. And it's good because this is the potential here for an aggressive setup. Because it does have, yes, let's go through the boxes. So we need to see green there. That's non-negotiable. It cannot be an aggressive long setup if that's amber. That has to be green. Oh, Carl, but it's just starting to curl the right. No. That has to be green. That is non-negotiable. I do want to see positive price action, and this price action is a bit all over the place. To be fair, let me get the zigzag tool going. There we go. That one, and that one. So what does that tell you? You know, we've got rising peaks and falling troughs, and then today's extreme volatility. It's good to see, though, that massive volume. So this started out with big black candle. People thought the result today, I'm guessing the result today, was bloody awful. Selling like crazy. And then from just somewhere, somebody pushed the buy button and just took them out of the market. They just took all that stock on. They took on all that risk. Maybe there were some short sellers in there as well, thinking, shit, Codan's gone. I mean, long-term downtrend, this is going to be a great hedge for my portfolio. Not doing what we do, waiting for the end of the candle, and got short there. There were people who sold out of Codan and went underweight, compared to its ASX weighting, because the boffins in their analysis department told them it was a bad result. And now they're underweight Codan. And Codan's finished like that. So you think about how these market participants are feeling. You've got some short sellers. By the end of the day, how do they feel? Like, they're shit scared. You've got people who are now underweight. They're a bit shit scared as well that Codan goes up. And then you've got people maybe looking for aggressive longs, counter-cyclical longs. And they're probably going, well, actually, this starts to look good. So how's the demand and supply side shifted? Like, after you see that candle, do you want to sell? Like, that's the other party. That's the other group. We've got people who have owned Codan forever. Like, they've been in Codan forever. And at the start of the day, they were getting to that point where they're just about to give up and finally sell. And they see that close again, I might as well just see. I might as well just hang on. And again, we could talk about fundamentals and all those silly things. And we just have a chat about how market participants feel. And are they more likely to be part of supply or part of demand? And if you can put those two together, you're going to get what the price is going to do. And I think if you've got Codan, you're probably more likely to hang on to it. And if you don't got Codan, you're probably more likely to try and get it or get it back. And that means there's more likely to be an excess of demand in the system. But we have some other layers. Ideally, we see the high peaks and high troughs. Tell me that demand is building, supply has been removed. Definitely got some supply removal today, but I can't see that demand is building. I can see an amazing and interesting candle today, but can I see demand's building? I can't really. The other thing I need to see is because we've got this thing, and I'd much rather have this let me tell you, than an understanding of the quick ratio, or the price to earnings growth ratio, or the book value and all that sort of crap, to be honest, right? I mean, what would you, ladies and gentlemen, would you rather have a deep understanding of all of those ratios and numbers and metrics, or would you rather have my long-term trend ribbon? So let's look here and let's look here. And this is why we have this overarching rule when it comes to aggressive setups, is we need to be able to, if we're getting in here and clearly, we need to understand that could be our risk, we need to be able to make one-to-one into this trend ribbon, because the trend ribbon is not something to be trifled with. And I don't think we can here. So on that basis, as much as I think Codan will probably go up, I've got these rules that tell me, I can't really buy it yet. Now, when can that change? Well, we know if we can get through this ribbon, then the ribbon's not a zone of demand, so a zone of supply anymore. The ribbon's not a barrier, okay? If we can get up here, like we've seen with a couple of other case studies, then we can look at other levels, but that doesn't mean other levels won't be barriers, and we've got a few here. So I think there's a few problems here with Codan that I can't reconcile, but if you are inclined that way, Mick, as I said, it's up to you. At least you know what you're getting into. And I think that's also really important, because, like I said, you can buy the worst looking chart and it still goes up and you make money, and you can buy the best looking chart and it goes down and you lose money. But do them both. As long as you manage your risk, as long as you cut that loss short when it occurs and let that profit run, did it really matter how you got into it? The getting in is that important. The getting out is that important. Okay, let's get to your online requests. I must remember, please don't let me forget, I've got to do Missy's US stock when we get to US stocks, which we will later on tonight. Doris has some US stocks, which we will do later on tonight. Hayden's got VMM, which is picked back up again today. Definitely made the broad list. I didn't quite feature chart it because, and it's very good, don't get me wrong, it just didn't feature because of that supply and a little bit of that candle just popping beneath here and popping beneath the second from last peak, and it got marked down. And I'll often give chart scores out of 10, and it lost points for that, but it's still very strong. I'm going to go like an 8 out of 10, but for those feature charts, I'm trying to get 9s and 10s out of 10s. But it is very, very strong. So I can, if it's on that main list by default, it is plus 1/3 by default. It is an add risk. FRP goes without saying. And obviously, let's write these down. It's a continuation setup. That's also, I think, important, but also pretty obvious too. Let's go to EBR, which is going to be easy because there's not a lot here that I like about it. It would be hard to analyse because there's an amber trend, and then there's the green. It's green, but it's a bit flat. The price action, I draw all the peaks and troughs. I don't need to, because if we gave this a score out of 10, it's not going to be an 8, is it? It's probably not going to be 6. It's probably going to be a 5-ish. And then we have to ask, well, we could talk all night about EBR Systems, or we could just say, well, it's 5 out of 10. Let's keep moving. And I think I'm that way inclined on that one. Doesn't mean that next week it hasn't printed this almighty, great big, not red. It's going to change colour in a second, white candle, and it's the most amazing stock for us to talk all night about next Monday. But it's not there yet. But the good news is, using this system I'm teaching you, you'll see if it is that good. You'll see it. That's your job. So I'm a pass on that one. TEA, which is not that one, is that one. Today's an issue. What are you asking for this one? This is an interesting thoughts on today's candle in the trend. So I'm guessing maybe Hayden's got some of this one, and he's a little bit nervous. He was probably all geared up anyway. Yes, he is, or probably all geared up anyway to sell at $5. At least let some go at $5. But maybe some in the market kind of beat you to the punch there a little bit early. It's a decent candle, isn't it? And it is on decent volume there. So we did see some significant buying, and this is where I do get a bit concerned, is when we see some significant buying coming in early in the session, and then they get smacked up by the close, because it's all the same stuff we talked about with Codan, but in reverse. So think about what we said of Codan. You've got longs that went in this morning. Now they're caught off guard. We said Codan, there are shorts caught off guard. We've got people who wish they sold instead of people who wish they bought. People who are probably overweight instead of underweight. So it's a reverse of all that psychology. And I think that candle, and I don't think I can tell. I mean, that's why I have these tools. So I don't have to think. But when we're double the average volatility and more than double the average volume, and you're seeing a shape that looks like that, I think we have to pay attention to it. And often you'll hear me on Monday night say, look, I don't think that's sinister enough. I don't think that in and of itself is enough to do anything. Isn't it fair to say I say that more often than not? It's the minority of times that I go, okay, I'm not sure about that. And this is all I'm doing about it. I'm just taking a precautionary measure. I'm going to go minus 1/3. That obviously leaves us with a 2/3 risk position, or if well, no, I can't say FRP, is it? But it's 2/3. Yeah, 2/3 risk position remaining, and just seeing what happens on the next candle. Another confirmation candle, we might be tempted to pull the trigger on another third, and that's all. That's all the order of magnitude we're talking about. Because it is not a candle that we're going to sell our entire holding on, because I think if we're just taking too great a risk. And that's another way to I guess to think about it, to flip your thinking around, is to say getting out any more than that is too risky. Isn't that a paradigm shift? Is that a paradigm shift? Getting out any more than that is too risky. Yet most people are thinking to hang on to this is too risky. To hang on, is that fair to say? Most people look at the Codan chart and say it's too risky to hang on. And yet my mode of thinking is it's too risky to get out. I want you to take that away tonight and go dwell on it and stick it in the back of the oven in the back of the mine and just bake that a little bit. Adonis confirming that I was brazen and disrespectful to talk down CSL. And I wasn't talking about CSL, I was just talking about the fact that the dip kept dipping. And the funny thing for me is I really think there's a bit of a paradigm shift for a few high net worths, a few family offices, and a few fund managers who are starting to not believe the bullshit that the brokers are spitting them. And that was really what my commentary was about. Let's go to Roscoe, who's got LKY, which is one of my favourite charts at the moment. What a monster this is. Once again, I have no idea what they do. But whatever they're doing, it seems to be going right for them. And great segue, I think, to go from the last candle we saw, which was TEA, where we felt that the balance of probabilities is skewed towards the supply side starting to take control and requiring us therefore to take some actions with our risk. And then we get to a candle like this and we say, well, actually, the risk here is not hanging on. And I know you might say, hey, Carl, it was 4 cents not that long ago. I want to say I probably put it in on that day, but actually I don't think I was here. But I would have. And there's another signal here, there's another signal here, there's another signal here, there's another signal here. I know I've put it in since I've been back. So probably I've put it in from 10 cents, confidently speaking, and it's now 30. So it's gone up, it's 3 times its former value, and therefore it's gone up too much. And I think that's risky thinking. I don't know what's going to happen next, but I do know that this is a full risk position for me, and I'm happy to add risk here. I know some people really struggle to do that, but all I can see is demand side control. It's just unanimous that people out there, forget what you think, and that's a tricky bit, forget what you think, but other people, all they want to do is own this, and they want to own more of it. Okay, let's go. So plus 1/3 FRP for that wonderful looking chart there. BCA, I think, is in a very similar boat. Today's candle, and this again, we're getting 3 nice little charts in a row because you saw me poo-poo the what was the TA candle, but we've got average. Why won't you let me draw? We've got average volatility here, and below average volume, and you can see that in the candle, I know, but it's always nice to have these things to remind you if you forget. Like if you make too much of this, isn't it good that you've got this and this here as backup to say, look, actually, just calm down a little bit. It's not that bad. And I don't think this is that bad at all. That is good. The price action is still exemplary. And I could be wrong. That could be the top of the top. But in terms of more often than not, candles and that pattern, more often than not, it's not the top. So I'm still a full risk position and happy holder of I'm not plus 130 on that candle. Let's go FRP as a happy holder, but then also say, look, you can add a third on the next demand side candle whenever that occurs. So plus 1/3 on the next demand side candle. Thank you for those two. Roscoe, in fact, he's got one more MM8, which is trying to break out of its funk. It's trying to get something together. Certainly, that's the candle there. That's the candle there. It's a little bit chip, chip choppy. Is that the right word? Chip chop. Prior to that, but I think trying to move into a phase where we've got some clean price action. Happy holder. Don't get me wrong. Just watching this and this. It's a little bit of a supply reinforcement there, but there is nothing in that chart that tells me that we need to change our risk levels at this stage. So for me, I'm still FRP. I'm not obviously adding risk, but would be happy to do so on the next demand side candle, which would probably look something like this, and then it would look very, very solid indeed. So if we say that and that, that's the candle you want to see, and then let's just go copy paste, and that would be an incidence of plus 1/3 if you were to see that. Thank you for those three. Ross, Hayden's got tonight, can you please talk about your RS relative strength comparative tool and how you might use this in decision making to choose one trade over the other? So yeah, look, pretty simple. It's the higher the bars, the better the trend. They're all ways to, I guess, check one against the other. If you can't differentiate them on any of the other factors, then you can use that. Generally, I just glance down and I like to see green and I like to see rising. I know I'm probably going to be okay, right? Probably on a pretty good thing. If we look at some of the other ones that we've seen today, I mean, look at Codan. And I keep coming back to these two because they're the only two I could remember, but that's today's list. There were several, 360. So we're just looking down here. Interesting that one's obviously popped up today. ACDC we've talked about. That one's popped in for the first time in a long time. That one's been in for a while. That's very similar to your Medallion, isn't it, Roscoe? But I think maybe that one looks a bit better. So you can see generally, as long as we're green, as long as we're rising, as long as we're trending higher there, you see those are actually just starting to come into their own too, aren't they? Then we're in a pretty good state. And if I've done my job well, we shouldn't see any reds down here. They should all be greens, or just starting to become green. There you go there. And that's the feature list, which you'll see in tomorrow morning's update anyway. But for what it's worth, you're getting it first. And inverted for the downtrends. And what we're doing there is we're comparing the performance of the underlying security against the ASX 200, but the indicator I gave you in TradingView gives you the ability to compare against anything. So if you're trading in the US, you can compare it against the Nasdaq if that's what you prefer. Okay, and we want to see outperformance. So we know, if you read my analysis in the evening wraps, you know that the big fund managers play favourites when it comes to sectors. They play favourites when it comes to stocks within those sectors. And what we're trying to do here is identify the best of the best and just put our money in those. Let's go to Mike. Michael's saying CSL is gone. Yeah, look, I think it's in a bit of trouble here, that's for sure. And we know back in the olden days, you might have looked at that dip and you might have, like many people, said that, CSL's down. It's fallen quite a lot, but it's a good blue chip stock long term. It tends to go back up to $300 every now and then, and I'll buy some. Hopefully, none of you thought like that, not because of where it'll go next, but simply because I'm trying to teach you a different way of doing things. But it has turned out that, very feeble rally. Look how. I mean, that's a half decent day, to be fair, but then look what happened. It's in trouble, and I don't care where it goes. It's not that I hope it goes down. It's irrelevant to me. It's just the balance of probabilities. I think it's more likely to go down than up, and it is in tonight's feature for shorts. it's in the feature there. And we might as well look at the shorts. I don't think we talk enough about shorts. It's always good to have a few of these up your sleeve and go into them knowing that if it is a rampaging bull market, you've got 30 longs going, that 3 shorts, you're probably going to lose on 2 of them. And you just cop that. You say, okay, that's okay, because if the market did turn suddenly, they're the ones, I'll probably be pretty happy I had. But if we look at some of these charts, if we invert our thinking, they're very similar to the longs, but obviously inverted. That's an interesting one there, isn't it? QBE as an aggressive. That is actually an aggressive setup there. And so is that one, 0. That's an aggressive setup. Let us go to EUR. Michael's saying EUR, and I thought there maybe he wants to look at the euro, but I don't think so. I think he wants to look at this one, European Lithium, which looks very, very strong. And, Michael, if you're worried about today's candle, I don't think you need to be. Yes, we're getting a little bit close to this area here. And, I'm going to draw it to there. And, it's completely arbitrary. Don't get too stressed out. I just got to the top of that shadow there. And, there's a little bit there as well, isn't there? And then there's some big bits up here I don't think you need to worry about just yet. But yeah, we're seeing the manifestation of supply exactly where we expect to see it. No surprises or prizes for guessing that. But not a terrible candle. Like, as much as this level should be a pretty serious barrier, actually we ended with a decent little downward pointing shadow today. Look at the volume. And what does that tell you, Michael? It tells you we actually took out some supply there. We actually did the work. The demand side did the work, removing some of that supply, and we've actually fared pretty well, all things considered. And when you put that against this, and the price action's good, and predominance of white candles and downward pointing shadows, I think, still, I know there's a little bit of supply popping in there, but it's supposed to. I think we're okay. So on balance, and that's the best we can do at any time, is on balance, is say, look, FRP, obviously I'm not going to add any risk, but I'm not that far away from it either. I could certainly go plus 1/3 on the next demand side candle, because by definition, that next demand side candle is going to happen in that zone of supply. So it means we've cleared them out, and I think that's a good thing. Let's go to Zip, which is zipping along. I think probably did its best to shake a few of you out. I know somewhere around here we said FRP plus 1/3. Maybe I might have said demand side candle, because I'm not sure why I'd be writing it all the way down there, but you get my drift. FRP. Our mentality was to hang in there, and I think on this candle here, as frustrating as it was, you would have been out. I'm going to go so far as maybe even 2/3 down there. I think hanging on to 1/3. But maybe even 2/3, and then you didn't really have much of a chance to get it back, because on that day you go, at least I've got 1/3. I'm not too fussed about selling 2/3, and that you're kicking yourself, oh gosh. But you also go, you know what? At least I got 1/3. And today I couldn't add on that candle because the upward pointing shadow. But today, like, we knocked $4, we closed at the high. So yeah, FRP obviously, but I think also plus 1/3 today as well. And there shouldn't be anything really out there for a while. Because that's a long time ago. So, yeah, pretty happy with that one. And what's your next one there? IPX. Looks pretty good to me. No complaints there. So, yeah, FRP is the obvious call. Not adding risk on today's candle, a bit of an upward pointing shadow. 7's not a round number. I wouldn't worry about that at all. But certainly I could add 1/3 on the next demand side candle. Oh, all over the place. Try again. Plus 1/3. Keep hitting that to next demand side candle. I don't know if you noticed, but as we get to sort of this point of the evening, my typing goes astray. Don't put any more in. That reminds me. So we're going to stop at Perry's US stocks, and then we'll work our way back up. And I need to pick up the pace clearly. Robert's saying, Carl, your thoughts on ... Don't know. I'm sure he's going to get back to me. BMM. There he does. Not that one. Yes. Ripper. Where did I put it? I think I put it in there. Maybe did I put it in there? I wonder. I can't recall. They all blur into each other. That one there did not have a turnover filter, and that's the only reason why I didn't see it. Otherwise, I would have put it on that day. So apologies if you're angry at me for not putting it that day, but I just couldn't see it. Certainly put on that day today. Look, I don't think it's you have to do anything with it today. Obviously not an ideal candle, but yeah, happy with it. It is frustrating when they gap like that. Make that decision on the open whether you want to buy that gap. Small gaps, I think, are good. If they're too big, then you could end up with a candle like that sometimes. But look, I don't mind. But it won't change what I'm going to say here, which is FRP. Not plus 1/3, but certainly on the next demand side candle. And it's not so much that the big gaps are more prone to pulling back. I think that I really have, misspoken there. It's more that the bigger the gap, the harder it's going to be probably, the further you are away from your like-green zone. We know I like to be as close to that as practically possible, but also the worse your risk-reward inevitably is going to be. If you're looking as your risk level, and then you're looking up and you're going, well, where's my next point of supply? Well, it's probably there. Can I make that work? And you're going to get to the point where maybe the trade doesn't work as well from a reward to risk perspective. But I know if you did get in for whatever reason this morning and you're a little bit worried about that candle, I'm not too worried about that candle. The gap is still a great signal of excess demand in the system. It might take a few candles to get going again, but I still think that's very, very strong. Robert, in fact, asking whether minus 1/3. I think I've answered that. So if I'm saying FRP, that's not minus 1/3. If I'm saying plus 1/3 on the next demand side candle, that's not minus 1/3. WTM is looking much better. So that's good to see as well. And the good thing about this, obviously, is it's hit its supply zone here, and it's through that. So that's nice to see. There's nothing really. I don't think that's anything to worry about. That's the obvious one. Next area that we would be interested in. It's actually holding. It's this old supply zone is now acting as a demand zone. Obviously, today's candle is very strong. Nice volatility, above average volume. I can't fault this. I mean, this is close to 10 out of 10. If there is a tiny fault, it's just the fact that I was going to say that trough and that little peak there, a little bit of an overlap, but it had such a great run. It's probably no surprise there was a little bit of a pullback. I think today reconciles all of that, and I'm a very, very happy FRP and a very, very happy plus 1/3 on this one. This one definitely made the feature list tonight, as you'll see there. It's appearing in that list. Let's go to NVU, which had a little bit of an indeterminate day today, but I still think there's a little bit of an upper shadow, but I still think on balance a strong day, and it definitely made the broader list. I didn't feature it. Maybe if it closed on its high, I would have featured it. There's a little bit of supply in the system here that makes me think twice about featuring this. But if you're on it, it's very clear. It's very clear, FRP. And for me, a confirmation of that candle is all I need to get me over those couple of supply side candles. Okay, so this one's very easy for me. FRP, that's very easy. But also next demand side candle, then I'm definitely interested in adding to this one. Okay, let's go to Herzl. Herzl's got MTH, which is I love this. It's so fantastic when these ones that people are picking, and we haven't. It's not like we've talked about this recently, and it's in tonight's feature list. So that's very rewarding for me to see that. So it's a yes for me, obviously, because it's in the feature list. But I like this. It's a nice little base pattern through here. Strong candle today. Little gap and run. Close on the high. Above average volatility. Definitely above average volume there. Probably about double. And there is a little bit of an area here, but we had such a strong close today. I don't think it's anything to worry about. In fact, you can see we closed at it, so that's fine. And then there's really nothing sort of until we get up here. So from a reward to risk perspective, we actually got a pretty little tight sort of stop area and a pretty decent reward to risk, and that's sort of heading in the right direction. I don't know why we dotted. That was a definite addition for me. FRP, if you happen to have it, plus 1/3. If you don't, no need to wait for a different candle. CRN is a fascinating one. And I haven't, obviously I haven't put it in the scan list because I haven't done aggressive setups. And whilst the two I did put in today are aggressive setups, at least they're above the long-term uptrend ribbon. So I don't think that's too challenging for people who read market index. But for you lot, this is a classic aggressive setup here. I'm surprised we haven't talked about it earlier because we have had really all the requisite criteria being met for an aggressive setup. We have the price action, we have the trend, and I would say really from about this candle here is where, in fact, really that candle there is where it starts to become quite credible. And I know you couldn't see the next candle and you might have been a bit nervous about it, but that's the candle I think it does actually become a bona fide aggressive setup. Yes, that was a green trend there. And then after that, the next touch and hold of the light green ribbon, which is really critical as well. This is the next candle here. You could maybe argue really aggressive down there. And then you just had to say, well, you know, if my entry's here and my stop's probably down here, okay, and that is my risk distance, right? Can I make one-to-one at the long-term uptrend ribbon based upon an entry, say there? And I think you could. I think you could have. So that would have been like the textbook aggressive entry on CRN. Now we're in the ribbon. So we are in the zone, aren't we? So how do you reconcile that? I'm not sure you can, because we're at the point where it literally could, in 4 candles or 5 candles time, turn around again. It would take, I mean, it needs to go up quite a bit, doesn't it, to get through the ribbon and get some fresh air up here. So that's the, you know, that's probably the next key supply zone. But it's a fascinating setup. I can certainly confirm that. I don't mind it. And again, it comes down to your own sort of trading style. And it has to be treated as an aggressive setup. And yes, I could see reason to add risk to it. So certainly I could do this. I mean, this is something I can certainly say is, if I had it, I would hold it, because I want to see how this plays out. It's met my criteria for an aggressive setup. The supply side is 100% in control in the short term, but there's some conjecture about the long term. That's why it's aggressive. Whether I add risk here, it just depends on my feeling about the long-term trend ribbon. That's all. That's up to you. But yes, that is a very interesting setup, and it's a reason why MPW. I had to wait and wait and wait for MPW. If you've seen that one, finally got in because it got past the halfway point of, you know, like that's about as aggressive as I could probably go. So at least I'm past the halfway point of the trend ribbon. Let's go to, lost my spot. I have to go back to Sue. Sorry, Sue. It looked like I missed you there, didn't I? But that's Robert's fault, because he split his request up into two different separate bits. Sue's got MP1, which would have given you a scare. And I'm glad we brought this one up today, because it does highlight why we have this sort of soft stop system and why we wait till the candle close. Because if you had a hard stop on MP1, probably through there, I think, is your point of no return. And yeah, you would have been stopped out here, and maybe with some slippage, look, let's say there or there, but probably not much worse. Certainly you wouldn't have been as bad as down here, like some people got out at. Some people got out at that low, at the long-term uptrend ribbon. Look at the long-term uptrend ribbon. Yeah, I tell you, ladies and gentlemen, please. And, you know, it closed actually really well on the day, certainly demand-side control oriented, and it becomes a hold on the next day. Becomes a hold, and then on the next day we say, well, that actually is still demand-side oriented. We're still okay, and then today is we're coming up roses. So for me, this is pretty clear cut. FRP, if you've got it, that never changed, I think, through that whole process. I'm actually happy to go plus 1/3, and it highlights why we have this wait for the candle close system. CCL, you're not a good day today, is it? That's got my attention. That's up there with the TEA one. I don't think we'll have anything. It's just relatively new listing, isn't it? So we don't have any other stuff out there to peg to supply. And then we've got $4 lurking. And I think I'm going to give it one more day. Let me see another candle here. If it's another candle that's similar to that, particularly one that throws an upper shadow, particularly one that doesn't move past or doesn't close above the midpoint of today's range. So it doesn't get above the midpoint, closes towards the low of the session, and confirms that day as an area of, that candle's an area of excess supply after such an emphatic gap up. That would worry me. So look, I'm going to go just hanging in there. FRP for now, but look, it's definitely watching very closely. Also watching for confirmation of supply or excess supply at that level. And if we saw that, then I think very quickly managing our risk on that one. But still definitely having some skin in the game because the rest of the trend is very strong. Let's go XYZ, which, yes, I was thinking about you today, Sue. I'm pretty sure you asked me about this recently. And I was saying I was with you. I think that was you. And I was saying, here, I'm with you. I thought that was a very, very strong setup. But then we had, obviously, some earnings out. We thought, well, actually, that day is not that bad. I know there's a big gap there, but, it's holding the trend ribbon. It's not that bad. We did say if it closed beneath that candle, we would go ZRP. Fortunately, it's hung in there. It's actually hung in there pretty well. I'm not sure if I ran it in the broader list today. I think I did, but don't quote me. But looking at this now, I think I should have if I didn't, because I like this. I like the fact we've held that short-term uptrend with a nice little gap and run. And it's going to be gappy because it trades in the US. It doesn't really trade here, right? But I think that's actually starting to look very good again. So yeah, FRP plus 1/3 for me, and hopefully we're getting closer to our break even on that. Maybe, I don't know, maybe you're ahead. I don't know where you got in, but at least we're heading on the right track. Okay, going to Perry's now. Perry's got Hub, which we've talked about several times. I can't fault it. I'm glad Perry agrees with me, because that means I'm on the right track too. And yeah, this is pretty straightforward, and it always was. And again, another excellent example of why we have that soft stop system, because you would have been shaken out of that otherwise. Happy with that one. CBO, which is also another exemplary trend. Not that one. There we go. Oh, look, that's magic. And if I was looking for case studies before of great continuations, I kept pulling up Codan, but I certainly could have pulled up this one as well. It's been in the list several times over the last few weeks and continues to deserve its place in the list. And I can't fault that. And a lot of people are going to look at that and go, I can't buy that now, Carl. I've missed the run. How about that? I've missed the run. It's just not the way I think. All I see is supply side control. And Perry going 3 from 3 in my list as well. I definitely featured this one today. I'm pretty sure I featured CBO. It is. That got featured also. And I featured Hub. So there you go. Perry's just got 3 of my feature charts tonight. And this one is a little specky, but doing all the right things here. And out of a bit of a trading range that was inflicted on it because of this point of supply, breaking out, pulling back, holding, testing, holding, last trough at or above the second from last peak, and otherwise good trends here. A little bit of volume coming in today is nice, and certainly some volatility. And I don't think we've got anything there in the way as well, which is even better. So that's looking very, very strong for me. So one of my favourite setups tonight, plus 1/3 FRP. There you go. And let's keep moving now to DBO, which is ringing a bell. Did that come up today? Maybe it's come up recently. Probably come up recently. I don't think it came up today because the candle doesn't have it. I'm going to put this in the category of one to keep an eye on because certainly interest is building. We can see that. Volatility is building and the trends are changing. And when you've got that combination of building interest, building volatility, changing trends, white candles coming in, something's up. You know this. You know the way it goes. I got a mate who knows the guy who works on the drilling rig. Actually, doesn't know him. He's used to go out with his girlfriend. She's still in touch. They still text each other. But he said something to her about, they're drilling next Friday and the results are on the way. And he just saw visible gold in the, so the gold was just spewing out of the drilling rig there. And mate, if you buy it now, it's going to be, $10 by Christmas. So that's how it starts, I guess. Insert your own stupid story there, but keep an eye on it. But it doesn't meet my criteria today. No, it doesn't. Okay, coming from Perth. Don't worry, that was my rearing. That was my gestation as an investor in my teens and my early 20s. Was looking for hot tips on mining stocks. Let's go to Roscoe. You're not allowed to go lights out, Carl. You already take holidays. Lights out. Lights out for what? I don't know. Thanks for not taking trend ribbons overseas with me. RNU. Is this the only critical minerals stock that hasn't run yet, Nicola? We've talked about it a few times, haven't we? And let's give it a score out of 10. It's a warm 5, perhaps. What this is lacking that Diablo has, and my tip is if I had to pick between Diablo and this, I'd probably go Diablo because there is the interest in there. There is the volatility, and it's got a bit more going in terms of changing its trend. Whereas poor old Renascor Resources, I think, is being beaten down by a bunch of insiders who really are quite happy to sell at any price. There is some demand trying to get through them, but I don't think the demand is showing enough signs it's winning that battle just yet. Not a terrible chart. Not by any stretch of the imagination. As I said, it's a warm 5. Maybe it's a 5.5. It just needs to rectify that volume. It needs to rectify the volatility. It needs to kick some supply butt, basically. And then it's probably going to start to look really good. But I think it's a bit early for me. But happy, look, it's FRP if you've got it. But I just think all the setups we've seen today, there are. Better is not the right word. Better is not the right word. There are stronger indications in those charts that the demand side is in uncontested control. Is that the better way to put it? I think that's the better way to put it, because that's what we're looking for. Okay, how are we going? These ribbons are the gift that keeps giving, says Hoozle. Thank you, Hoozle. I appreciate that. And they're yours. They're yours now. Let's go. I've told you what they are. I can't take them back. You know what they are. You can always make them on your charts. Let's go to Adonis. You missed ASX stocks G&G and JBH. Sorry, Adonis, it wasn't deliberate. G&G looks very, very strong. Today's candle's not ideal. And it is happening sort of just within that shadow of $5. But I don't think it's enough in and of itself. There's that phrase, to do anything about it. I'm happy to give this one the benefit of the doubt. Obviously, I'll be watching it closely. I don't want to see, growing confirmation that $5 is an issue here. It might become that way. But in the meantime, look, FRP, no, obviously not adding risk on that candle, but happy to do so on the next demand side candle. Let's just go with FRP for now. And then we're going to go to your JBH one, which, that was looking excellent here. I wonder if there's there might even be a dividend in these last couple of days. And if that's the case, that it looks better than it actually looks. Either way, I'm not too fussed about that. Adonis is saying there is a dividend there, so shift everything up. I'm still happy with this one. Happy to give it a little bit of a wide berth because it has been such a strong performer. Don't want to get beneath there, but I don't want to get beneath there in the meantime either. So I'm going to go FRP. Obviously not adding risk just yet because of those two black candles. Dividend notwithstanding, but next demand side candle I can certainly add some risk. I'm just trying to pick up the pace here, ladies and gentlemen. CAZ, which is actually that one, a little bit probably needs to be in the Diablo camp, I think, Peter, because we are sorely lacking. Can I say sorely lacking here, as in interest? And we are sorely lacking in terms of price action as well. So very overlappy, a little bit of I'm not sure, can't decide. And as that changes, then I could change my view on it. It's not the worst chart we've seen. Again, sort of a warm 5.5, warm 6, but not clean enough, I think, to get my money. That's my view. TTM, on the other hand, is looking substantially better. And what impresses me about this is that vertical move, the shallowness of the pullback, because normally when things move vertical, people want to sell them, like here and here. Not the case. We held, and we're pushing back up. I would like to see more volume on this one. Okay, I think it's a strong setup, but it could be stronger. But certainly enough to get an FRP, and certainly enough actually for me to go plus 1/3 as well. So there's no further caveats on that. Obviously, wary that there might be a little bit of supply sort of coming in there. There definitely will be some coming in there, but deserves your consideration for adding risk if you're that way inclined. RXL also made the list today, and I think this is much cleaner certainly than the last one. I love the vertical move. No pullback. We are going to see a little bit of supply in here, but I'm happy to take that risk on the basis that, we've had a few above average volume candles, 3 out of the last 4. So there's a bit of interest there. This one might be a little bit slower and steadier, but still, I think, as I said, definitely FRP and plus 1/3 deserves your consideration for adding risk if you're that way inclined. Definitely on my list tonight. Don't think it made the I did actually put it as a feature. There you go. Okay. No, I'm not rethinking it, but I think there are stronger charts in that feature list. Let's go to Evan, who's got SPZ. Caught my attention today. Did I make that a feature? I did. I did make it a feature. This one has substantially more, I think, interest coming in. That's good. And I think we did close above this level, if I'm not mistaken. So that's a good sign. Nice strong candle today. Close at its high. We obviously do have a bit of supply coming in here. It's very similar to the last setup, but we're going to have the same result. FRP plus 1/3. Yes, happy with that one. Definitely deserves your consideration if you're looking to add risk. SM1 is not as much ringing a bell. Oh, that's SXL. So I'm in there. Well, that one I put in as a feature because that was just a huge bloody gap and run. But SM1, what's that one? Synlait Milk, okay. Yeah, look, interesting. Needs a bit more cooking for me. Next, Dink. So a little bit of a pullback. It's going to start to look interesting. And what I'm looking for is any sort of test and hold of the long-term trend ribbon to tell me that it's starting to act as dynamic demand again. So similar to, well, the last time we started to look at it was around here, isn't it? So I want to see similar to that sort of a move there. And then it might have some legs, as it did before. So just a little dink. Until then, yeah, look, it's a bit sketchy, literally sketchy in terms of its price action, volume, volatility. It's not something I would naturally gravitate to, but it's not the worst one I've seen. 5.5, 6-ish, perhaps, because it's had a decent little run there. And IPG, which is that one. So this one I think looks very interesting. I actually ran this one in the feature list today. So it's good. We've knocked off most of that feature list. And the reason why I thought this deserves a go is, again, in the interest of diversifying our setups away from all continuations, getting that mix of turnarounds in there. This one is more of a turnaround. It has well, I guess it's kind of half turnaround, half aggressive, isn't it? Because we haven't had the dink back to the long-term trend ribbon, but clearly we have respected the long-term trend ribbon. We've done this before, but this is different. Okay, we're through it, emphatic, more than double the average volume today. But consider it against some of the other ones in terms of potential reward to risk. So it definitely makes the criteria. It definitely is a big candle. It definitely deserves its mantle as feature, but you do have to then compare and contrast some of these against each other, and maybe this one starts to just lose a notch, like a half a point on a few of the others because of the reward to risk. Probably more like a full point, isn't it? Maybe when you get to the end of it. But importantly, full risk position if you've got it. We're going to get to the US ones in a second. I did do all of your ones there, Sue, in the end, and we're now down to Perry's US stocks, and we're heading back up. Daniel's saying, I think you need to look at market capitalisation when evaluating take profits and stop losses and targets, e.g. if a stock is $50, goes up like LKY, I would definitely take profits on big runs. They can turn around very quickly. I don't know. I think big and small, they can all turn around very quickly. I think maybe the small ones are more prone to just mysteriously blowing out, isn't it? But be careful what I say because the big ones can do it. I don't know. I have to think about that. I think I think I just defer to the price action, Daniel. I think that's where I'm going to go. Just look at the price action, the volume, and maybe just focus on that. But happy to take that suggestion on board and maybe do a bit more thinking about it. Let us head over. Dare we try? Now you're going to watch this. I'm going to go to browsing, see a blank screen, and then I'm going to turn off Firefox, and then turn it back on again, and it'll magically appear. How about that? Why does it do that? Watch this. Let me prove it to you. I go to Amy Broker. I go back to Firefox. Firefox has disappeared. I close Firefox. I turn it back on. It's like the IT crowd. Did you try turning it off and turning it back on again? Anyway, it didn't come back that time. I spoke too soon, and now I've screwed us all. Shit. Oh, no, there it is. Okay. Hang in there, Firefox. Hang in there. Okay, we got it. Let's go. Let's go to here, and we're going to do Perry's MP1. No, that's not right. We're going to do Perry's US stocks. TBBK. How are we going for time? Bloody awful as usual. The Bancorp. I can do this very quickly because I tend to just write FRP and plus 1/3 on them because they tend to be bloody awesome. And let us just zoom out a little bit there, go to 1 week and see if there's anything in the way. There's nothing in the way, so we've got blue sky potential here. Look, a nice little pullback, test, hold of long-term trend. Remember, we're still very close to that light green zone, which is great. Taking out the supply in a long-term uptrend. Great supply removal there in the volume, good volatility, decent relative strength. There's nothing I don't like about it, which means I like everything about it. So FRP plus 1/3 on that one. Let's go to NWG, which is NatWest Group. We're guessing another financial services company, and starting to see maybe some themes playing out here. That looks exemplary. That is it's just such a boringly good chart. I love boringly good. We talk about getting a mix of setups. Try and get some boring good ones in there. They just chug along for you and don't give you any headaches. This is the perfect setup. I can't fault it. If you can fault it, please tell me how. And I'm waiting. I'm waiting for you to tell me how you're faulting it. Where's the supply? Like there's just no indication that the supply side has any control here, and therefore we have to go plus 1/3 FRP. And AORT is the final one, which might be the best of the lot. Having a look out here, nothing out there on the weekly chart, so it's all blue sky. And you know how I feel about these big gap and runs. Shallow pullback is the key, and then off we go again. And it doesn't get any better than that, in my opinion. So let's change that to green and go plus 1/3 or FRP plus 1/3 sheer perfection, and we can see the interest that's in that one as well. So 3 excellent setups there from Perry. Moving up the list, we're going to Hecla Mining, if I'm not mistaken. Big silver company. And this one is for Peter. Could have been a better close on Friday, Peter, but still very, very strong. I think there will be history here because it's a silver stock. So I know that the chart of silver has got some stuff out here. So I'm guessing Hecla Mining also has some stuff out here, and it's true. And that really resembles the chart of silver, doesn't it? If you don't believe me, that's the chart of actually silver looks better. So why is Hecla Mining not as good? It's maybe it pays some dividends, which I think we've lost it. Maybe pay some dividends, which maybe then is sort of flattening the price a little bit. But no, otherwise, if I could copy and paste that highlight from before, it is amazing, isn't it? Sometimes Perry's last stock and this stock have nothing to do with each other, but the pattern is the same, and therefore the excess of demand in the system is also the same. And FRP plus 1/3 on that one. Thank you, Peter. And a little bit of an Easter egg for those looking for silver exposure, because we did say the silver chart looking pretty good. I'm just making sure I haven't missed any US ones on the way back up. I don't think I have. We're getting pretty close to the end. I think I've just got Adonis to go and Missy. Nobody reminded me about Missy's stock. So let me do Missy's one here. NKE, which is of course Nike, which actually looks really interesting there, Missy. It's just consolidating, coiling, if you like. We've got a bit of a point of supply here that it's being potentially restricted by, and that all makes sense. So yes, the price action's a bit flat, but it makes sense why it's flat at this stage. The short-term uptrend ribbon is doing a great job of acting as a zone of dynamic demand, as is the long-term trend ribbon, and that's the critical factor here. So we are seeing a turnaround setup. Not the worst one. Look, this is more than a 6 for me. It's like a 7 or 7.5. But I think with that there, let me see, and then you've got a little level there, and then you've got that one there to contend with. There's probably easier ones out there. But if you like Nike for whatever reason, it's a stock or a chart you have some sort of affinity with. Yes, FRP, absolutely. Yes, plus 1/3, but for me, with the caveat of the next demand side candle. It's not far away because the next demand side candle, white candle, high close, or a nice downward pointing shadow, a close towards there, sort of a close that's a very high 79 number or a low 80 number. That's what I'm looking for, and that's enough to tell me that we've eliminated that supply. We've more than likely eliminated that supply, and then we can look up to there. And you probably, if you're getting in sort of around that 80 level with this, there's your point of no return somewhere down here, you're probably 1-to-1 pretty comfortably actually into that big point of supply. So it's going to make the trade work. So happy with that one also, Missy. And then we get to Adonis's Google, which is still looking okay, isn't it, Google? Yes, looking more than okay. So pretty happy with that. And that's a good sign, I think, for the Nasdaq also. Go back to the weekly chart, and we're heading up to blue sky. So that's a very good sign for the Google chart. A little bit of an upper shadow on Friday, which may be a bit disappointing considering the index closed so well. But I don't think that's going to worry me too much. I'm pretty happy with this one. And I don't think I need to wait for a better candle there. I don't think so. I think that's being a bit pedantic. I'm just happy to look at the everything else on this one and say full risk position plus 1/3 on that one. Adonis NVDA, which had a bit of a dip the other night, didn't it? That was that one there, but it's come back well at the short-term uptrend ribbon, so that's important. It's obviously holding here, so that's what we like to see. How concerned am I about this supply point of supply now that's been formed by that? Very strong comeback. So am I going to wait? I think am I going to wait just for that? If I have to think that long, that's probably a sign that I should wait, isn't it? If I have to think that long about it. I love this candle, and I love that candle. But I'm also concerned about that candle and a little bit of the, lower peaks and lower troughs heading into that. And I think was that earnings related? I can't remember. But all I'm contemplating here is the dink, is whether I just wait for just a little dink first before getting involved. That's all I'm contemplating. And you might have your own opinion. You might be happy just to go right now. So me, I'm FRP, that goes without saying. I'm not at a point where I want to reduce risk on NVIDIA just yet. And I'll just go plus 1/3, but have a prerequisite of the next demand side candle. Just to take us... that was Trump. That was not Trump, but one of the spokespeople said that they might, there was a change of position from the White House on the chips that they were selling into China, and the White House has got a revenue share of 15%. Can you believe that? That's amazing. And yeah, okay, so it's reporting Thursday. Interesting. Do you want to get in before that earnings report? I don't know. It looks probably going to be a ripper. But yeah, look, you got to Thursday to get the dink. That's my opinion. But FRP in the meantime. But yes, you're right. That was more White House related, trade related. But I'm on record, not prepared to take any risk off the table on NVIDIA just yet. MSFT, not NSFT, MSFT. That one's a bit more problematic, isn't it? And I definitely need to see a whole heap of dinking on this one before I was to add risk to it. I don't think I'd want to be full risk position. I'm probably more like a 2/3 or a half left in it. Certainly got some on the table if I'm that way inclined, because there's so many other great setups too. Maybe I'm not. Maybe I'm saying, well, I could always come back to this and catch it on its next leg up as well. So that one's less urgent for me. AMZN, let's say that. And then Amazon, I still think that looks good, but maybe needs a little bit more cooking, because we are just spending some time beneath that major point of supply there, and it has been reinforced with this move here. But a strong Friday, and I like looking at these because it helps me navigate the index as well, because this is ultimately the index, these big hitters. So it tells me that there is some inherent strength there. And I'm probably just well, if you were to go, I mean, FRP is about that question, but the question is whether you're going to add risk on that candle. And for me, I'm a little bit cautious because I have so many other stocks pressing for my risk today. I've got so many other setups that are saying, look, I have to get in today, that I can afford to hold these to a higher account and say, look, give me that dinks. Let me just test that supply, have a little pullback, make a nice little trough, higher trough, tightens my reward to risk, get a nice little candle closing at about 237, 238. That's going to say I've taken that out, and I'm all, for the most part, taken that out. And then it becomes unequivocal. So it's very, very close. FRP goes without saying, and probably just waiting for a little bit more confirmation for adding a risk at this stage. If I've missed one, please let me know. I think I'm okay. Trading View app for Windows, says Haraju. I will look into that, Haraju. Can you send me an email offline and tell me a little bit more about that? Is that a broadcasting tool? Does it allow me to flick between Amy Broker and PowerPoint and all of those things? That's what I'm looking for. So if it's something like OBS, obviously they can do that. So this is going out to all of you in recording land on the internet. If there is a better broadcasting software out there, more reliable, then please let me know, because it'll benefit all of us. In the meantime, let me remind you that everything we've discussed tonight is general in nature and has not taken into account your personal financial circumstances, objectives, or needs. So before acting upon that general advice, you can seek further professional advice to determine its appropriateness for you. Always remember, trading is risky. You could lose money. I don't think we saw many examples of that tonight, funnily enough, which is always reassuring. But it will happen to you at some stage. Ultimately, it's you and not I is responsible for everything you do, unless it's good, unless you make a lot of money, and then I am responsible. With that in mind, ladies and gentlemen, it has been an absolute pleasure chatting with you. Hopefully you enjoyed the session tonight. I certainly did. All the best for your trading investing until we catch up again next Monday night. Bye-bye for now.